welcome to our weekly look ahead at the markets. And lately it seemed like a one-way street for the higher for longer narrative from the central bank. So we've seen big repricing over the course of February amid a global bond sell-off, and we've seen bond yields rise quite sharply. The US 10-year yield rose above 4% last week, finally broke that 4% barrier. It pushed on up to 4.1% before retreating on Friday somewhat. And stocks were broadly higher for the week, so small gains of around that sort of 0.5% to 2% mark in Europe. US stocks were a little bit more timid in their ascent. There is this question mark still over inflation. We saw Eurozone inflation accelerate. The core reading rose to 5.6% from 5.3%, so the highest since the euro began, and we saw a re-acceleration in some inflation measures in Germany and in Spain and in France. So that inflation backdrop remains key to where we're thinking about where central banks get to. Of course, that has an important bearing on the stock market, and it has an important bearing, of course, on FX markets. So we're continuing to see a bit of a chop, though, as markets try to price in exactly how high the Fed in particular goes and how high the ECB goes as well. Markets last week priced the ECB terminal rate up towards 4%, and we saw a couple of the big banks readjust their calls for that terminal rate to 4% as well. So we're now looking at the ECB hiking rates by 50 basis points in March, and then 50 basis points again in May. Question marks over the Fed. We had Raphael Bostic, the Atlanta Fed president, saying he favours 25 basis points of hikes. Meanwhile, Neil Kashkari, usually very dovish, suggested that he was leaning towards 50 basis points and needing to raise his terminal rate forecast when the Fed next comes out with its dot plots, its summary of economic projections later this month. So that's the backdrop to where we're at. And coming up this week, we're looking to a series of central bank meetings. We've got the Bank of Japan, of course, the new man Ueda not installed just yet, but we'll look to see exactly what sort of normalization process they might be looking at. So far, they're not normalizing. They are defending that 5.5% target on the 10-year yield. We've seen the yen prodding around some key technical levels last week, around 136, the dollar yen cross at around that 136 level, sitting on a couple of big moving averages and an important fib level as well at that level. Also, RBA and the Bank of Canada, we've seen sort of movements around inflation there, but really they're taking their cues from the Fed as much as anyone else is. So looking to see whether the RBA goes again, looking to see whether the Bank of Canada does decide to pause, and then we're looking at that big US jobs report at the end of the week on Friday. That was that monster jobs report for January that set the cat among the pigeons and really showed that the Fed has no need to pause interest rate hikes just yet. So we'll look to see whether that strength in the labour market continues in February. And also just bearing in mind that last week, talking about inflation and the re-acceleration of inflation, we saw the prices paid component in the US ISM manufacturing index jumped from around a disinflationary 45.5 to an inflationary 51.3. That was another signal that inflation is not going away, and that means that we might be getting a higher terminal rate. In fact, we probably will be. But just on that note, we had some comments from an ex-Bank of Japan governor, Shishikawa, who wrote in an article for the IMF, which you should have a look at. He was suggesting that maybe it's time to reassess the inflation targeting mandates that central banks have. Not necessarily suggesting that we accept a higher inflation rate, say accepting that inflation stays at about 3 to 4%, but certainly worth looking again at how central banks calibrate their monetary policy. I think we do probably end up in a situation where central banks accept that inflation is going to run a little bit higher. That will have important consequences for gold as well as equity markets. So looking ahead, earnings season is pretty much over. So we're looking at the central bank meetings, Bank of Japan, RBA, Bank of Canada, and also Nonfarm payrolls on Friday. That's your week ahead. Thanks for watching.